All right, welcome everyone. Welcome to the Hurley Investments Market View Commentary for May 24th, 2021. Today I'm going to go through a bunch of different things. I want to go over cryptocurrency. I want to go over some movements. I want to go over a little bit of understanding how to be successful as an investor. I received this quote the other day, and I'm going to say you can adjust or change any word you want to in here. For me, it was entrepreneurship. This is the quote that followed it, but I found out entrepreneurship could be with life, it could be with jobs, it could be with relationships, it could be with investing. There's a lot of different things that will fit this quote. I think it works for us as a group, but entrepreneurship is living a few years of your life like most people won't, so that you can spend the rest of your life like most people can't. As I got a hold of that quote, I don't know where it got sent to me from. It might have been Facebook, might have been a friend. Entrepreneurship, you could say investing, trading, your job, your relationship, is living a few years of your life like most people won't. That effort, that time spent to learn, to just give it your all and go all out so that you can live the rest of your life like most people can't. Or it says that you can spend the rest of your life like most people can't. That hit me over the last week. And it hit me because of some things that were happening with my family, some things that are happening with my job. I'm going to go over that here in just a bit. But very important to put what you're doing in life into perspective. And if it's not the perspective you like, don't hesitate to jump out. Don't hesitate to say, you know what? This perspective is not where I want to go. So it's time to move to a different perspective. Last week was another consecutive week of the S&P falling. So it's fallen 2 or 3 weeks out of May. I actually think it's down, 4 out of the 6 last weeks. Largest drops for energy and industrials. Other sectors in the red included financials, consumer discretionary, materials, communication services. And I think the reason behind most of this, well, actually, let me ask you guys, what reason do you think that we're seeing energy, industrials, financials, consumer discretionary, materials, communications? Why are these sectors falling right now? And take a guess. Obviously, none of us are going to know for sure. So Mod says following Bitcoin. Pretty impressive. Definitely could be that. Abraham, I like that quote as well. I kind of wanted to follow the lines of, well, I don't believe Bitcoin has that amount of influence on the market. I do believe that we're not seeing the follow through with the easy sugar, right? Drinking the Kool-Aid. We haven't yet received another stimulus package. It's supposed to be a stimulus package to fix the, how do I say this? The infrastructure for the United States. Our roads, our bridges, upgrade our power grids. We don't have that infrastructure upgrade or stimulus package created just yet. I think we're going to have it. In fact, let's face it, in all reality, the Democrats can do whatever they want. So we're going to have it. It will come eventually. The question is, will it come with bipartisanship or not? And I think it's a 2.1 stimulus is down to a 1.75. I think the Republicans want something down the 600. So there's a huge gap right now which is going to be a problem moving forward. Another comment just came in, politics not favorable to the country's well-being economically. 100% agree with that. Really, it's going to be a it's going to be a problem where we're going to continue to make things out of whack, and there is going to be a price to pay sometime down the road. That's what it comes out to. On the upside, you had real estate followed by healthcare, utilities, technology, and consumer staples. Good to see technology trying to make a little bit of a comeback. Now, I'm going to make the comment that when the bones in your arms look like this, it kind of feels like the world is crashing around you. Kind of is a bit troublesome. I'm going to use a pen on some of these just because I like to. Kind of troublesome to see a bone fragment here and a bone fragment there. And there's actually one hidden right there and another one there. If you were to take a look and see these pictures, there's supposed to be an arm. Give me your best comments. I'm letting you go ahead. You call it however you want to. When you see an arm that looks a little like that, a little disgusting. When you got the bend right here, a little disgusting to see the bend in the arm right here. When you're not seeing a pulse, you can't feel a pulse in the arm. That is what my boy decided to do last Monday evening. The beauty of what I get to do is as long as I have an internet, I get to still work. I wish Rajiv was here today. He called me, oh my gosh, take care of your child. It's like, well, you really can't take care of too much when the arms look like that. I'm pretty sure we go in tomorrow and he's going to go right into surgery at 8 o'clock in the morning. So don't be surprised if I've got to cancel tomorrow night's trade findings and adjustments. When you think about it, you can make it out to be really bad. Or on the flip side, it's just a broken arm. And I think that's where we sometimes see something scary and we make those knee-jerk reactions. Or if things aren't going our way, we lack that fortitude to stay for a little while to do what most people won't do, so that we can live the rest of our life like most people can't. I'm going to show you one other thing that I thought was interesting. That is my daughter on the top of the box. She's about 4.5 feet tall, so you can see it's about 16 feet. Jordan is crazy. That is Jordan on top of the box. Here she goes. That's at least, 16 feet high? 3, 2, 1, go, Jordan. Go, Jordan. I have no idea why my little girl wants to do that. I have no idea why my boy decided, you know what? I'm going to go ahead and I'm going to smash my arm coming off a trampoline. But there are certain things in life you just have to deal with. And you can make it out to, oh my gosh, his bones are in the other bones, are 4 fragments. It's been a week, and because of the swelling, it's not put down. A doctor had to pull it out because there was no pulse. You can make it sound as bad as it can be, or you're going to deal with it. And I think when we come to our market right now, the first point I'm going to take in today, right now the market isn't making a whole lot of sense. And I'm going to go through our portfolio. Apple, best earnings ever, and they lost 10 bucks. Are you guys ready to pull out of Apple? Is now the time to pull out of Apple because they had their best earnings and they didn't move? Boeing has a rebound to $405 if they can solve the problems, ship out the planes, and have the CEO shut his damn mouth. It's that simple. Are we ready to get out of Boeing that still has a 9-year backlog behind it? Bank of America up to $42.50 and has pre-2008 $60 price target. Baidu, great earnings, pushed around by hedge funds that lost, I'm going to say almost everything. Disney, do we get out now with the reopening occurring except in California? Who's ready to bail out of Disney? I'm not. It's not making sense why they're not rebounding. I mean, 120 million subscribers. They gained what, 30 million, just didn't get 34 million or something like that. Facebook, volatile because the owner is a rich idiot. Oh, I sit there and I look at him talk in front of the Senate, and I just, how is he a billionaire? 7 times over. I don't understand. Company has huge upside potential. What else do we have? Micron, a key chip maker, potential buyout opportunity. So do we sell out now? It's gone as high as 90 or 100. Not doing great right now. In fact, Micron is at 83 after hours. Under Armour, $42 price target. Good earnings, not great. Would we get out now when it's at 21.34? Just was up at 24.50. Visa, exit all the long calls because it fell from what, 235 to 220. The stock market doesn't move in a straight line. And this year, and I'm going to put the little caveat, so far, we don't look amazing. But we looked amazing last year. Do you jump out right now and miss living a few months of your life like most people won't, and miss the opportunity to spend the rest of your life like most people can't? You've got to do your research. Warren Buffett has it right. Just minimize downward movement until the companies head higher. It's that simple. If you've done your research and you know through the numbers on where some of these positions should get to, Just because it doesn't go on your time frame doesn't mean you bail out. Stick to your research. Stick to what's happening. Take a look at last year's returns. You'll never get those type of returns sitting in a fund, sitting in a stock picker. The numbers don't add up. It's just a broken arm. It's just May. I'm not worried where we're at right now because I've done the research on where we need to be. Number two, second, cryptocurrency. Right now, cryptocurrency is the biggest Ponzi scheme out there. That's a pretty arrogant thing to say. It might be the future of buying and selling. It might be a new mode to do transactions. But right now, cryptocurrency is the biggest Ponzi scheme or multi-level marketing garbage out there in the world. Why would I say that? Good one. Because there is no product, service, or tangible pricing involved with the currency. I like it. Another one, not endorsed by any government. Not a stable platform, and the coins can be stolen and mined for bits and pieces. You know what really sucks about it? It is 100 right now, 100% emotionally based traded. I like it. Zero intrinsic value. In fact, if I can go ahead and read that, Abraham, because unlike stocks or ETFs or indexes, which has some intrinsic value, this is absolutely dependent on instant, non-transparent supply and demand, which can be affected by anything, even unreal news. I like that so well. I'm going to copy that down here. Because unlike stocks, indexes, and ETFs, which has some intrinsic value, and intrinsic value is a tangible value of product or service, this is absolutely dependent on instant, non-transparent, great way to say it, by the way, supply and demand. I'm going to throw it in here, cycles, which can be affected by anything, even unreal news. If you feel like gambling, Bitcoin is number one, and Bitcoin is BTC. Number two, Ethereum, which is ETH. And number three is Litecoin, which is LTC. And I'm a little surprised because a couple of the people that have asked me about this have the least amount of risk tolerance. Yet they're asking me about Bitcoin. Other than investing in Bitcoin, it would be better to go gambling at a casino. Your odds are the same. They're stacked against you. But you have real tangible money. You get some free drinks. And Hurley Investments has chosen, I'm going to go ahead and I'm just going to put this in there. Hurley Investments has chosen to not gamble with clients or our own. And this is a gamble. This is just like futures. I can't believe people trade futures. They trade it on the weather. Oh, but there's seasonal patterns and da-da-da-da. BS. They trade it on the weather. They trade it on the news. I am shocked at people that think day trading, that people that think futures, that people that are investing in cryptocurrency think that they have a justifiable pattern to use when it's based on an unpredictable, unsupply and demand, uneconomical. Well, Kevin, oil futures move with wars and supply and demand. I get it. And it used to be OPEC, but it's not OPEC anymore. If you could see the amount of futures traders that were devastated in the last 4 years because the United States found energy independence, which just means we're able to export more barrels of oil than we're importing, you don't get it. But we have chosen not to gamble. We are not going to gamble with our clients' money. We are not looking to be in Bitcoin or those type of things. I've got some articles down below to share with you that will help you understand why we're choosing to do what we're doing. Third but not least, we make our decisions based on technical analysis, fundamental analysis, sentimental analysis, and plain old common sense. And someone asked, well, Kevin, could you give me an example? So today we took off Disney long puts. Why did you do it? It's in nowhere land. Technically speaking, we can justify a bounce. We can justify an oversold bounce. Actually, I need to use a marker that we can see. Let me go to my pen. Let me choose a different color. We have an oversold bounce that we waited 1, 2, 3, technically 4 days to confirm. We verified the oversold bounce right there. It falls in line with December and January lows. We did okay. We did okay not making anything. I think we lost 9 cents because we made great money here. We made great money here. And we made some money as we moved it down to the earnings right here, 90 to 180. And so right here, you know what? We lost a dime. We lost a dime because we made it through earnings. We put profits 3 times in a row from 200 and 195 to 185 and 180. I mean, we took a little bit of profit on the way down. We lost 9 cents or a dime taking off our long puts today on Disney. But let's see what we're doing. Technically, we can justify a bounce. Fundamentally, they're in good shape. They're reopening. They had a great earnings season. They missed 4 million comps from an analyst. or an anal. Sentimentally, they're one of the reopening trades. People want to go back to movies. They're in great shape. Common sense. Well, we have the opportunity to buy it at a cheaper price. We have the opportunity where it's trading at 174 for a rebound back up to 203. On the way down from 200, we made $5.40, a couple dollars. I mean, we made $12-ish to $14 on the way down. Kevin, you didn't make every dollar on the way down. Bingo. You don't make every dollar on the way down. I've only said it a million times. Anything you make on the way down is profit as things come back up. It's that simple. Here's an example where we made a decision using technical analysis, fundamental analysis, sentimental analysis, and you know what? We even threw a little bit of common sense in there. I like where we're at. This is the reasoning behind making our decisions. Kevin, you're not technically bullish yet. I agree. In fact, we probably will get technically bullish, but we have a problem. We have the 50-day right here. And we have a 50-day that's occurring right now that'll hold us as resistance into a sell in May and go away summer month. Disney needs a catalyst and some good news to get over the 50. So we'll probably put a 185 put back on when it gets up to the 50-day. If we are wrong and it can't hold the pivot point at 172.71, which is about $1.50, $1.60 below where it's currently trading, we'll get some protection back on. This is what we do by spending hours upon hours of crunching numbers and doing that hard work now so we can reap the rewards down the road when other people can't. I love that we get to dollar cost average without ever bugging you guys for more money. We get to dollar cost average without me ever hassling you guys and saying, go put more money in your account. We trade our money like we trade your money. We feel the pains, we feel the frustrations, and you know what? We're not going to jump ship. You guys can. We recommend that you don't, because we're not going to change. The results from past years is all the history we need to see that we're doing what we're doing is worth it and right. We're not a big box house. Each and every individual account still gets looked at every single day. We treat each individual person like their own person. We're not just throwing a bunch of crap and tell you to shut up and just deal with it. Every day your account is reviewed by a real person to make sure we're doing everything we can to make you as much money as possible with as little risk as possible. With that said, Costco, our core holdings, has their earnings coming up on the 27th. If you ask me where we're going to end this week, I'm going to tell you lower. Lower because we'll probably have a sell-off Wednesday, Thursday. Friday is the last day of the month. We have a 3-day weekend with Memorial Day. So the commentary will be pushed till Tuesday next week. Tuesday trade findings and adjustments will just take off. But that's where we'll be next week with our commentary. Enjoy a Monday. Enjoy a good 3-day weekend. You guys have earned it. When I look at the Dow Jones Industrial Average, it's still holding on to a bullish trend. Short term, it's bearish. But technically, we still have a bullish position in play as the RSI is bullish. The S&P 500 still technically bullish. Even though 2 of the 3 indicators say otherwise, the RSI once again remains, it keeps the S&P bullish. And the NASDAQ just barely getting bullish on both the RSI and the MACD. Has some recovery to get back up to 14,211. Seeing at 13,661. We've got 5-6% to the upside on the NASDAQ. If you ask me where we're going to end June, I'm going to say 4% because we're going to start hearing more stimulus. We're going to hear infrastructure. We're going to hear another package coming out, which probably isn't needed, but it's going to come anyway. When we hit that inflation down the road, we are so screwed. It'll make the 80s inflation look tame. It will probably create a world Great Depression. And it's just awful. We're blowing it. Earnings, not too much going on. Nordstrom's, it's the 3rd week of the retail sales. Urban Outfitters on Tuesday. Abercrombie & Fitch, American Eagle Outfitters on Wednesday. I have NVIDIA in there, but I haven't verified if NVIDIA is. I can't remember where I saw that. But if it is, I don't want to miss it. And NVIDIA says their earnings date is the 26th, which is Wednesday. That is a bellwether. Dollar Tree, Dollar General on Thursday, Dale, Costco, Big Lots on Friday. Really not too much is happening for economic reports until Thursday. GDP, durable goods. Friday, personal income, personal spending. It is the end of the month on a holiday weekend, a 3-day holiday weekend. All right. I found an interesting article. Industry must rethink the future of the workplace. This is FINRA. This is the Financial Regulatory Authority that manages me. And I'm going to be honest with you. For those that think we're going to work more via Zoom meetings and so forth, because it's human nature to be lazy, because it's human nature not to work a full 8-hour day, I do not see us coming back to a hybrid type system. In fact, you're seeing all, if not most, of the banking and the money management, it's all being pushed to come back in. People don't work without some authority over them. And I'm saying that in general. Obviously, I know the doctors are plenty of entrepreneurs that do a lot. But in general, when we're talking about lower level management, lower level pay, bank tellers and so forth, people are coming back to work. Companies aren't going to give up that micromanaging mentality that they've needed because it's been earned by the majority of people. All right, I've got a couple cryptocurrencies in here. Ford already has 20,000 reservations for the new electric F-150 Lightning pickup. Keeve and I had a little discussion here. Pretty interesting to see so many reservations for a pickup truck that is electric, but it's electric. It won't have the torque that I would expect for what trucks are used for. But go Ford. Finally, Ford might get to 1750. Ford enters a joint venture with SK Innovations. Bitcoin resumes its sell-offs over the weekend, drops to 32,000. I just put some information here on Bitcoin. With that said, what questions do you guys have? Ida, any way to invest, trade to counteract inflation? Long puts, the tips, the Treasury inflation protected bonds and so forth. You can do both of those. There's probably also a couple VIX ETFs, but they're weighted. They're 2 or 3 times. As you see that fear take off, you can do some hedging or protection in your portfolio using that. Kevin, if you're not going to get rid of any of your positions, are there some you're thinking about adding? So the short answer is yes. But as I talked with Keith, I spent some time with Jeffrey Dunyan. I've done my own research, worked a little bit with Jeffrey T. Smith out in Colorado. Because our valuations are so high and because we're up to market records again, we're finding it really hard to find an undervalued stock right now that has the potential to double in the next couple of years that we're already not in or not looking at. So right now, I don't see anything on the near horizon that's going to have me invest in something different at this time. Great questions, both of you. Are there any other questions? So am I planning on ditching trade findings and adjustments? Last time we had a kid that had an arm like this, we took him in. They took one look at it and said, we need to get him into surgery today in like the next 4 hours. So I don't know. My son has an 8 o'clock orthopedic surgeon appointment. And my expectation is they will try to push him in as quickly as possible. I will keep you posted. And Rich, thank you for that compliment, by the way. All right, if I don't see any other questions coming in, guys, I appreciate you being here. Guys, things don't have to look perfect all the time. With that said, it's just a matter of waiting out the bumps in the road, the downfalls, making something on the way down to make it tolerable so that when things come back, you have an excellent return. We don't jump ship every single day, every single week. At Hurley Investments, we're here to make sure that our fundamentals and our numbers are correct. We check them all the time so that we can get the returns that we're looking for based on our research. That's what we do. That's what we're here for. We're always watching so you don't have to. Guys, have a great evening. Appreciate you being here. I look forward to seeing you possibly tomorrow night or obviously next Monday on the Monday evening Hurley Investments Market Commentary, which will be pushed till Tuesday because it's Memorial Day. Good night, everyone. Bye-bye.